The market's gone crazy this week. Stocks are up and down worldwide. And these big international events are quietly hitting your wallet. VW gets hit with a €6 billion write-down from Porsche restructuring. Profits tank. US's big three indices hit new highs again on September 19th. FedEx's earnings steal the show. Argentina's central bank sells $678 million in one day to prop up the peso. $1.1 billion gone in 3 days. Hey, I'm Cheese, your money buddy. Today, let's recap the recent big events that have shaken global stocks and see how they're affecting your cash. Volkswagen just took a straight €6 billion write-down because of its Porsche restructuring, and profits got totally hammered. The company's saying it's part of internal structure adjustments, but the market's just reading it as a cash flow and capital efficiency problem. A €6 billion loss is a real knockout punch for European car makers. It also lays bare the anxiety legacy auto giants have right now with their EV transitions and capital moves. German auto stocks are all under pressure. Investors are worried there might be even bigger write-downs or asset sales later. Short-term risk for the auto sector is high, especially European brands. Better stay away until they actually nail their EV transition. The Dow, Nasdaq, and S&P 500 closed at all-time highs again on September 19th, and FedEx's earnings were the biggest highlight. Its fiscal year profits jumped 11%. They kept results steady with cost cuts and strong U.S. demand, which lifted the whole market's mood. Apple and Tesla also got a boost because brokerages upgraded their ratings. But here's the catch. This rally's mostly riding on hopes the Fed will cut rates and ease policy. Triple witching, when options and futures expire, cranked up volatility too. Risks aren't gone, even if it doesn't feel like it. The market's buying into policy easing hopes, not actual improvements in the economy's fundamentals. Don't blindly chase the rally short term. Stick with top companies that have steady cash flow, and avoid rate-sensitive or super overvalued sectors. Argentina's central bank dumped $678 million in a single day to prop up the peso, and over $1.1 billion in just 3 days. That's its biggest market intervention in 6 years. On paper, it has $39.2 billion in reserves, but only around $6 billion of that is usable net reserves. This kind of selling can't last. The gap between the peso's official exchange rate and the black market rate keeps getting wider. And with midterm elections coming in October, political and currency risks are piling up. Investors are already betting a crisis is coming. This is classic early signs of an emerging market currency crisis. If reserves run out, it could trigger capital flight and sovereign credit risks. Stay far away from high-risk assets like Argentina. Be cautious with emerging markets overall. Prioritize parking your money in defensive stuff like core U.S. assets or short-term treasuries. Let's also check out what's coming up next. The Fed might cut rates by another 50 basis points before the end of the year to pump liquidity into the market. Keep an eye on quality bonds with medium duration. If the EU's 19th round of sanctions on Russia kicks in, it'll ban Russian LNG and slash the crude oil price cap to $47.6 a barrel. Volatility in the energy sector could get worse. The U.S. job market's staying weak, but inflation's still stubborn. Watch out for worse economic data sparking recession trades. Loading up on cash and value stocks might be a smart move. Bottom line, finance isn't just distant numbers. It's tied straight to your life. Understand these trends and you'll avoid mistakes in investing and plan your future better. What do you want me to talk about next? Let me know in the comments.